All right, everyone, we'll get started here in about 35 seconds to be exact. All right, real quick, if you can, type in the market you primarily trade. So again, just kind of curious to see what market you guys primarily trade. We've got Forex, stocks, ES, crude oil, Russell, 6E, futures, Forex, FX, futures, options, futures, Forex, crude, bonds, and gold, Forex. Okay, very cool. Well, it looks like we've got a very good crowd for you. Today is a special event at the Trading Pub. It's actually a doubleheader event. We'll have Casey and Thomas from Order Flow Edge on, and then Adrian Tagrahi will be on shortly after that. So we'll have about 45 minutes of education on order flow, and then Adrian's going to come on and talk about psychology and trading. So what I'm going to do real quick, if it's your first time joining the Trading Pub, just to kind of give you a quick intro to what we do, I'll play a very quick 1-minute video, and then I'm going to turn things over to our first speaker. All right. Well, very cool, very cool. We appreciate you guys being here today. Again, like I said, we've got a great crowd. In the email we sent out about the event, we said, you know, what's the only thing better than a solid hour of education? That's 2 solid hours. So we're very appreciative of Thomas and Casey taking the time to be here today. They're going to share with you some outstanding education. And again, Casey, thanks again to you. We had Thomas booked about a month ago and had some issues, and then he was booked earlier this month and was sick with the flu, so we're glad to have him here, and I know that he's got a tremendous amount of experience in the markets, both in trading futures and Forex, and he's going to share that with you. Be sure to check out their web, flowedge.com. They have a kind of a weekly newsletter, their emails. I get their emails each week, and lots of good information. They have lots of free trading events, you know, where you can go in and watch them trade live, which is always fun. So again, try to focus as you can, learn as much as you can, and then definitely recommend taking a chance to see these guys trade in the live market, which I think they'll give you the opportunity to do at the end of the presentation. So Thomas, Casey, you guys can take it away. I'll put a timer up there just so you can keep track of the time. The next 45 minutes, the room is yours.
Okay, good stuff. Thank you very much, Morgan. So, okay, so 45 minutes. So you figure, Morgan, about 5:20. All right, so I'm going to speak for about 25 minutes or so myself, 30 minutes, and then I'm going to pass it on to Casey. Can I just get a quick sound check, please? Anybody hearing me okay? All right, good stuff. Yeah, Morgan, you know, I think third time is the charm for us. You know, we were jinxed. Excuse me, had a cough drop I wanted to get rid of. We were jinxed the first couple times. We had technical difficulty the first time. Second time around, which was about a month ago, is when I started to get sick. And here I am. I'm sick today, but there was no way that we were going to postpone it again today. So I want to apologize in advance if there's any coughing or clearing of the throat or any sniffles or anything like that. But I will get through this. But um, I'm Thomas DeLello, head trader and founder at orderflowedge.com. I'd like to thank everyone for taking the time out to join us for this short webinar today. It's really a pleasure to be here. I'd like to thank again TradingPub and Morgan, everybody over there for having us again. We're in very good company here. We love working with these guys. They're fully committed to bringing you the true story about the markets. And, we're excited to be an education partner of theirs. Also, I'd like to take a moment and give a bow, a big thanks, and really let's all give showing back up in the markets after a much too long vacation. We started to see some expanded range and volume and volatility since last Thursday or so, and it's just been fantastic opportunity these past few days. And so far I'm getting a feeling it's here to stay for a while. We'll see if the S&Ps get back above the 1530s. We'll have to see what happens. But as long as even if we don't drop like a rock from here, as long as we're not near those highs and making new highs, the volatility's still going to be here. Ultimately what will happen down the road, who knows? We don't have a crystal ball, but as long as the volatility is here, then we can do what we do best. Look for opportunities, and especially on the S&Ps, our trading for the most part is intraday. Let me get the screen share here. Give that a second, let that come up. Well, I have sickness I have now is a sinus thing. I went to the doctor yesterday. It's a sinus infection, which I've been battling for about 2 weeks now. And it's been one thing after another here on the East Coast. I'm in New York, on the East Coast, obviously, and everybody I know has been sick practically all winter. It just goes around. Can everybody see my screen? Casey, can you see my screen here? All right, good stuff. So, what's my experience? Well, I'm a full-time professional trader. I tell you what, a good portion of those years were spent running around in circles just like everybody else for a long time, jumping from one thing to the next, whatever was the flavor of the week or the month as far as the indicator of the study that everybody else was following, and that I would try to make sense of. And, becoming an expert in what didn't work before I was able to develop my trading edge. And, what I've discovered about the markets is that it comes down to supply and demand and order flow. And that's what my eyes have been opened up to. Everything we do in the markets as a trader is centered around supply and demand and order flow principles. Order flow drives price. Change in order flow precedes change in price. And that's something that you're going to hear from me. If you spend any time with me, you're going to hear that from me a lot. And, if you were to take just two things from this webinar today, I would hope that those two would be the two things that you write down. Order flow drives price, and change in order flow precedes change in price. So following the order flow, what it does for us is give us a real-time indication of what buyers and sellers are doing in the market based on the flow of orders coming into the market, the trades. Everything else is just noise. And here's something important I came to realize, that where the money goes, so goes the market. And the buyers and the sellers coming into the market, they bring the money, right? So it makes sense that we're following selling. That's what drives the market. That's the core of it all. Being that order flow is the fuel that drives price, and change in order flow precedes change in price, this is what we concentrate on following, on analyzing. And we've learned to identify clues in the order flow that show up before price changes, especially in the context of stop runs. And, we're going to get into some basics today, guys. We're just going to scrape the surface, and then Casey's going to come on and give everybody really a amazing opportunity to come join us for a while, something that we've never done, really. We've never opened up our doors to the level that we're going to do today for everybody. So If you like what you hear and see today, if it resonates with you, I'm going to invite you to come take a little bit of a closer look. And when we're in our trade room, we have all time in the world. I'm not a professional webinar presenter. I'm at home with live screens talking about what's going on in the market, real time trading, and breaking down what's going on. And that's what we do in our trade room and trading room all day long. So our methodology, it's not about a red light, green light system. It's about understanding the underlying dynamics of the market, developing the ability really to identify when a change to market structure is coming. Right? And there's many different ways that people attempt to trade the markets. The way that we trade in the markets, our approach to buying and selling in the markets is much how we buy and sell anything in our everyday lives. And it comes down to quantifying wholesale and retail value. It comes down to quantifying real supply and demand in the market and looking to buy low wholesale and sell high retail, just like you do in every other part of your life if you stop and think about it. So simplicity is the key for us in how we run our trading business. We coach traders on learning to trade by focusing on the reality of how markets work and how money is made and lost in the market. We break it down. We take it pretty deep. We look beyond the patterns. We look, it's not just about identifying patterns on our screens. Of course, on the outside, the basic level, that's what it comes down to. But you have to take a look behind those patterns and understand what's going on. Why are those patterns setting up the way that they do, and why do they play out the way that they do, or not play out? Yeah, I'm going to get over to the second slide in just a second. But our guidelines are based on forces that govern price movement, supply and demand, and it's an approach to the market that's robust. It works in any time frame, from intraday trading to swing trading. The exact same form of analysis and logic applies regardless of the time frame. Applies to any liquid, transparent market, commodities, currencies, interest rates, whatever the case may be. But our goal here today is just going to be to give you a quick perspective of how we look at the markets and make logical sense of market structure and supply and demand, show you the info that we look at, how we have that info organized on our screens in a very simple, very visual manner, and take a look at what provides us with our edge. And if what you've seen here today interests you, then we'll give you information later to contact Casey and get set up to take it a step further. All right, let me get the slides going here. Okay, so let's just talk about the plan of action here real quick. And I don't know if we're going to go in this exact order, but this is the basic information that we're going to cover, because once I get going here, I'm going to start to talk pretty fast because like I said, we have a lot to go over, and I want to actually get to a point where we're actually showing some examples from today's trading as well. So, I'm going to be direct and straight to the point. This is how I am. This is how I teach. This is how I am in the trade room. I don't mean to ruffle anyone's feathers or offend anyone. What I speak about is based on my own personal experience and from speaking to literally hundreds of traders over the years. So please don't mistake my emotion for anything other than passion. I've been there. I've been on both sides of the fence, and now being on the right side of the market, I see how the wool gets pulled over the eyes of most. It basically, you fed the wrong information from the time you first enter this business. And we've all been conditioned when we first come in to think and act in certain ways about the market that are basically incorrect. And that's a problem, because the minority, the smart money traders, continually takes advantage of this on an everyday basis. Every day that the markets are open, they're conducting their business. And we are basically their customers, especially for newer traders when you're first coming into the market. But a few of the things that we're going to go over today: trading the market with a different perspective. We're going to talk about the smart money versus the losing traders, the weak hands, and why you want to join the smart money. We're going to talk about order flow and supply and demand, kind of break it down a bit. We're going to talk about our 3 basic steps for trade entry and management. We're going to show our dashboard, our order flow dashboard, and a few of the things that make up the components of our dashboard. And I'd like to get to some chart examples from today and maybe the last couple of days. But, our goal is to train, coach, and mentor traders on really two levels. How to understand the of market structure in order to identify where the important previous areas of supply and demand are located in the market. And those are the areas that we're looking to trade in. And then when the market gets into these areas, how to understand the real-time order flow to a point where it becomes a priority in your decision-making process for trade entry and trade management, both for profit targets and risk management as well. Everything we do revolves around supply and demand principles. So we're looking for a synergy. We're looking for the areas in the market where we should be conducting our business, previous areas of supply and demand, and then for the real-time confirmation in the real-time order flow to a point where you have a synergy between previous areas of supply and demand and the real-time supply and demand. And that's the sweet spot that we look for, that synergy. That's how we stack the odds in our favor. Now, I trade different markets. My most active market is the S&P futures. But I'm also active in other markets. I'm very active in the currency markets, but on much higher time frames from a position standpoint, position trading standpoint, swing trading, where in the S&P futures, I'm more of a scalper. We also trade crude. We trade gold, the 10-year, 6E. But there's some advantages. In my eyes, in my opinion, S&P futures is the best market to learn on. There's a lot of intraday opportunity, not only just for trading, but for watching the market develop and to build your confidence, that conditioning that you need, to watch the market real time and be able to identify opportunity real time. Ultimately, you're going to get to the point where you can take advantage of that opportunity, but step one is learning how to identify it. When we're in the trade room, if I'm talking about a certain area, if I take a trade, not so much, where did he get filled? Did he get filled at 1482 and a quarter or 1482 and a half? That's not important. But why was I looking to get long there? Or why was I looking to sell in a certain area? That's the important stuff. So the S&P futures has two very important ingredients for us, besides the fact it's relatively stable, lots of liquidity. It's got heavy commercial and smart money participation, market maker participation. The more commercial participation, the better for using order flow analysis, since it's their footprints we want to follow it, right? We're trying to emulate the smart money, and it's their footprints that we're picking up on in the order flow that we track, and we're going to show that in just a few minutes. We need a healthy retail trader participation. Why? Because these traders are our competition. Right? We're not coming into the market every day trying to go heads up against the smart money. In fact, our goal is to join them, take the opposite side of the trades taken by the consistently losing traders. Right? It's a very action about the market, and one that very few traders make. And we don't have a lot of time to get into, but this is something we go very deeply into in our trade room, our training, talking about the whole idea of being aware of who's on the other side of your trade. And it makes sense. If 10% of the market, roughly speaking, is consistently profitable, we don't want to be on the opposite side of them. Right? We want to be on the opposite side of the losing traders, the 90% of traders that are consistently losing. So in the S&Ps, like I mentioned, mostly a lot of scalping type of trade sequences. And it's a good market to teach on. Usually very many opportunities in the course of a day to trade and talk about potential trade setups. So, but here's the thing, and you know how the song goes: if you can make it there, you can make it anywhere. You learn on the S&Ps, and you take that, and you could take it and apply it to any liquid, transparent market. And just like the members in our traders in our trade room have done, we have traders trading every day actively crude, gold, 6E. All these different markets, and they're talking about the markets, but our focus, although we follow other markets, we provide dashboards for these other markets, we provide information on these other markets. Our focus on the S&P futures. So we trade with a different perspective, and keep the questions coming, guys. We will get to them. Just keep them coming, and what we'll do is answer them all at once. But we're here today to show you a different perspective, a different side of trading, what we use to trade in the markets, our edge. What we're doing is quantifying real supply and demand in the market, and then looking to take advantage of the ability to be able to identify these previous areas where this imbalance took place. And simplicity really is the key for us in how we run our trading business. My trading and market perspective, it's reality-based. And the reality of the market is trading in its simplest form is about supply and demand, shifts in supply and demand in the order flow. Nothing less, nothing more. When your trading strategy is based purely on reality, and we're talking about the reality of the market based on the real-time order flow, then how and why prices move in the market, it's not that difficult to figure out. So yeah, we trade the markets with a whole different perspective from what you're probably used to seeing and hearing. But here's the thing, folks. The fact that we trade the markets with a different perspective, that's a good thing, because when you consider that 90% of traders lose on a consistent basis, it's a good thing to be doing something different than what they're doing. I mean, that's really just good common sense there. So you're probably going to see some market information today that some of it, it's always been there for you to use, but yet you didn't know existed. We know that trying to understand a new method or concept, looking at things in a different manner, can be intimidating at first. That's perfectly fine. And that's with anything that you've had to learn in your life. Initially, anything is going to be uncomfortable to learn. But let's be frank, we all know that trading in our comfort zone doesn't always equate to making money. So it's our job to take you out of your comfort zone. So just sit back, take it all in, keep an open mind. Don't get too hung up on specific details. Just absorb the general sense of what we're saying and talking about and explaining today. And I think you'll come to the realization before long that it makes a boatload of sense to have tools in your arsenal that are going to help you effectively make logical sense of the supply and demand force that really drives the market. Now, Wayne Gretzky, just a great example for the way that we trade in the market. Essentially, we make our money in the markets by finding imbalance and capitalizing on it. Well, we're not predicting. Retail traders, on the other hand, are trying to make their money by predicting. What we do is the opposite of predicting. We let the market move in one direction or another, and we create these if-then scenarios, like I'm going to show you in a minute. Then I might be interested in selling short if current order flow conditions confirm trade entry. So we trade without any pressure. There's no pressure to predict, no pressure to be perfect, no pressure to control the market, no pressure to trade every little wiggle in price. In fact, with what we know now, it's ridiculous to assume that the market's going to go to any price. It goes where it goes. You can't predict prices. What we do is watch them and use them to our advantage. This is what the pros do. Now, the analogy to Gretzky, arguably one of the best to play the game, and obviously someone was very successful in his business. His business was the hockey business. And I read this about him a long time ago, and I don't know why it stuck with me. And I didn't make the connection to trading till years later. But he wasn't concerned with going to where the puck was at the moment, but rather he wanted to be ready in the area where he thought it was going. So in trading, this is exactly what we do. We want to be ready in the areas where the market might be headed and be ready when it gets there. Right? So we're identifying areas above the market where it makes sense to be a seller. We're identifying areas below the market where it makes sense to be a buyer. When the puck gets there, when the market gets there, we're ready because we know what we want to see when the market gets there. It doesn't mean we're going to absolutely take a trade blindly, but if we're looking to trade in a demand zone below the market, where last time the market was there, buyers showed up, then we're going to look for real-time confirmation of buyers stepping back in, and then we'll take the trade. So much different way to trade. There's no predicting. There's no sitting there worrying about what the market's going to do from tick to tick. So what is order flow? Order flow is the real-time supply and demand caused by all the buyers and sellers coming into the market. And in order to become a successful trader, it's critical to understand what the traders, what the people already successful in the business, what are they employing, and information can differ from what the losing traders are using. Makes sense, right? If you want to excel in something, you want to be doing what the people who are achieving consistent success doing in the market. And the professionals, the ones that are making consistent money in the market, they're taking advantage of the supply and demand and the order flow information. So the order flow, and Simply put, it's the real-time supply and demand caused by all the buyers and sellers coming in. And this is what causes price to move. When you enter a trade, your trade becomes part of the order flow. If you're buying the offer price, you become part of the buying pressure occurring at that time. Right? If you are selling the bid, you become part of the active sell pressure that's coming into the market at that time. You become part of the order flow. It's the collective actions of all the traders entering the market at any given time which creates the order flow. This is what drives price. Right? So simply put, order flow shows you the auction in process. Price-based charts only show you the result of the auction. There's a huge difference between the two. So order flow is basically the measurement of buyers versus sellers. In our case, what we focus on are buyers and aggressive sellers. So our goal, our edge, our business is to identify supply and demand imbalance in the market. And once you understand how to identify key areas of the market and the order flow imbalances that are occurring in those areas, you realize that these are the areas where the market has high probability of reacting, and that's what we're looking for in price. So we're looking to stack the odds in our favor. We're trading with an edge, and all that means simply is that we're entering trades only when we're confident that we have probabilities in our favor. We're not talking about certainty of outcome, but rather knowing the odds with certainty. So I'm a trader who looks to trade only when I have the odds in my favor, not because the market's open, not because the market's moving, not because I'm sitting in front of my screens and my hand is on the mouse. I'm waiting for opportunity. And how do we identify that? By creating a synergy, as I'm going to show you, between previous areas of supply and demand and the real-time supply and demand as it's unfolding. We're looking for the sweet spot between the previous areas of supply and demand and the real-time supply and demand. All right, here's a quick example of the sweet stuff, the sweet spot. What we're doing on our charts, on our dashboard, we're looking to identify the previous areas of supply above the market and the previous areas of demand below the market. As you see them in blue, equals demand wholesale value. Areas in red above the market equate to areas of supply. So what we're looking for is for the order flow to peel away from price. Good visual example here. So we're looking for the order flow to exhaust before price does. And think about this for a second. What better time and place to get into a market than in a previous area where selling overcame the buying, and now in the real-time order flow, you can see the real-time selling is overcoming the buying, right? So here we have a previous area where the last time the market was here, selling overcame buying, right? Now the market's coming back up real-time, and we're picking up on clues in our order flow information, and that's what we're looking at here, here, and here. Clues in the order flow to confirm that, again, as the market comes back in this area, and this is the spot where we're waiting for the puck to come back into, we're waiting for the real-time demand to diminish and the real-time supply to pick up. And this is the confirmation that we're looking at here. We're looking for a rip at that point. You know, there's no guarantees. We're talking about probabilities. And think about it. If we have a previous areas of sellers here, how is the market going to get through this previous area of selling if in the real-time order flow you could pick up, you see clues right in front of you that the real-time buying is diminishing and the real-time selling is picking up, right? Again, there's no guarantees. Anything can happen at any time. You know, Morgan Stanley could walk on the floor when the market's here and buy 500 contracts, and that would cause demand to come into the market, and the market would shoot to the upside. You know, we would have no way of knowing that's going to happen until it happens. But we're talking about probabilities. We're talking about situations that we see play out more often than they don't. So I'm not going to go deep into this, guys. We're running out of time, but you know, smart money, there's a lot of important stuff to talk about. But when we talk about smart money, basically we're talking about the consistently profitable traders, right? These traders know how to take advantage of the retail traders. They know where the stops are. The number one objective of the big players, hunt your stops and get to your account. They're on the hunt for liquidity. Stops equate to liquidity. We're talking about the market. When we say manipulation, we're not talking about manipulation in a legal sense, although we know that occurs, obviously. We're talking about manipulation of beliefs. And of course the market's manipulated. It's not a gentleman's game. You have to stop and consider the implications of this. The market's not manipulated for fun. It's manipulated to sucker other traders into bad positions. And if it didn't work, they'd stop doing it. So the manipulation is always done to benefit somebody. So why not us? Why not you? So it's important to realize and see the ideas about what can and cannot be manipulated. It's necessary to think with an open mind. And it's not necessarily price that's being manipulated, but it's your belief. The market maker has to create a false belief that the market's going down to make traders want to sell. Right? If he wants to be a buyer, he has to create selling. He has to create supply. Right? If he wants to be a seller, what does he have to do? He needs to create a belief that the market's going up to make traders do the wrong things at the wrong time and get trapped. And we're not going to go deep into this. Very important to understand this, though. We go much deeper into this on a daily basis in our trade room, thinking about who took the other side of your trade. We don't really have time to get into psychological aspects. One of the important things that we look at is inventory transitions, but we don't even really have time to fully explain. This is one of our customary setups. It's one of our bread and butter setups. We had a couple nice inventory transition trades today, and I'd like to push through and see if we can actually get to some live chart examples here. But I just want to go through some basic examples, supply and demand, just so everybody's on the same page. Supply equals selling, demand equals buying. In any market, prices are driven down by excessive supply and up by excessive demand. When supply and demand are equal, balanced, price is going to move sideways. It consolidates. You get a two-sided trade. It's when supply and demand becomes imbalanced that price moves out of balance to find value. Right, this is what our order flow dashboard looks like. We have three charts 1, 2, and 3. And on all top pane is price, and the bottom pane is order flow, here, and here. Now, before we get back to the dashboard, we got to just explain quickly our 3 steps, our 3 guiding principles, if you will. Number 1, identifying the sweet spot, meaning the area that we want to do business. With the zones, we have a whole methodology in how we identify our zones, and if you spend any time with us at all live in the market, you'll see how the market reacts to our zones real time. Step 2 is reading the real-time order flow for clues to confirm trade entry and to help with timing. Right? So we're analyzing the real-time order flow as it's coming into the zones. And 3, we use this real-time order flow information to effectively and dynamically manage the trade once we get in. So our dashboard is centered around these 3 principles, right? So think about order flow for a second, guys, as price. The relationship of order flow to price, like the relationship of gas to your car. If your car has no fuel going into the engine, it's not moving. It's the same thing for the market. No order flow coming in, the market's not going to move. Now, if you're driving down the road and you take your foot off the gas, the car's going to slow down and come to a stop. With the market, if price is headed up into a supply zone and the buying fuel that was coming in runs out, it stops coming in, the market's going to stop going up. Doesn't necessarily have to sell off until new supply comes in, but that demand fuel, if that dries up, it's going to stop going up. It's cause and effect, right? So now, if you throw a barrier in front of your car or the market, it's going to stop even faster, right? So just like you have a fuel gauge on your car dashboard, we have a fuel gauge on our trading dashboard. In fact, our whole dashboard is like one big fuel gauge. Think about it. Are you going to look at your engine to determine how much longer the engine is going to run before it runs out of fuel? No, you have the fuel gauge. That's the purpose of it. So are you looking at price to try and determine when price is going to stop, or are you looking at what you should be focused on, the fuel that drives price, the order flow? It's really just a simple shift of focus and adjustment. You're switching your attention, all of which have little to no correlation with what actually influences price, over to the correct order flow based information that you should be paying attention to. So I'm a very visual person. What I've taken is what I've found to be the most important and relevant order flow information and organize it in a way that makes it easy to identify. Whatever market I'm trading, this happens to be for the S&P futures here, I have a dashboard set up. So what we're left with, what we have is a simple visual way to dissect the real-time order flow coming into the market. That makes your job as a trader a lot easier because all the information is organized. You're prepared ahead of time. We have our zones. Market comes into a zone. We already know what we're looking for in the order flow information. We have the information pegged. If we get the confirmation, then we're going to take the trade. So we have different clues that we're trying to pick up on in the dashboard. Very important clues about the market. We're looking for clues of no supply coming in at a high. No supply coming in at a new low. Right? We're looking for that supply to diminish. We're looking for clues that showing us no demand coming in at highs. Situations, and the order flow is telling us this. This is order flow again, here, here, and here. These studies are not based on price. We're looking for clues that are telling us, like today, there was very much more aggressive selling coming in on the downtick today than aggressive buying was coming on the uptick until we started to bottom out. And we talked about it in the room. All morning we were interested in selling until we got to a point in the market, and we're going to see if we can get to today's charts in a second, where as it was occurring that the market looked like it was putting in the bottom formation. We picked up in the order flow where the selling started to let up and buyers started to show up in a big way. And we're going to show you exactly where we were able to see that. So zones, we talked about our zones already. Don't have a lot of time to go into them, but we have supply zones above the market, demand zones below the market. Demand zones provide support. They're areas where buyers are more inclined to buy. They're the areas where the smart money is looking to do business. If they want to buy the market, they're not looking to buy new highs in the market. They're looking to buy pullbacks into demand. Unless something changes, the condition in the market, the context that there's news coming out, we're talking about the normal operation of the market and how the smart money operates. So demand zones below the market, supply zones are resistance above the market. They're red. They represent areas where retail value is located, right? Supply. So we're looking to sell retail in a market where our bias is down, right? We're not looking to sell a new low and get squeezed out on the uptick, right? That's what retail traders do. What are they doing? They're always selling new lows and buying new highs, right? We're looking to sell the uptick into supply. Sell the uptick into supply with proof that the real-time buying is diminishing. Now, again, we don't have time to go deeper into our zones, but there are logical areas in the market, guys. It's not some hidden secret algorithms that we use or secret math that we employ to find the zones. There are reasons why they work. And again, we're not going to get deeply into that today, but the next study here. So our zones are on top of chart 2. In the bottom of chart 2, we have what we call our BSP gauge. We're looking at the buy pressure, sell pressure. It's basically momentum of the order flow. It's the smoothing out of the order flow that's coming into the market, where this study and this study is the pure order flow coming in. This is smoothing it out, so it affects the momentum of the order flow. Right? So doesn't it make more sense to calculate changes in the momentum of the factor that actually influences price rather than price itself? That's what we're doing here. We're following the momentum of the order flow coming in, not price itself. So we're looking for divergences in the BSP. And that's what gives us a heads up that price is coming to an end. that particular price move is exhausted. Chart 1 and 3, on the bottom of these panes, we have our cumulative order flow. Same basic in different time frames. This is our higher time frame. This is our lower time frame. All right, we're looking for two very important clues here. Number one, commitment. We're able to pick up on when there's an uptick into a particular supply zone or a downtick into a demand zone. We're able to pick up on information that on a downtick maybe longs are staying committed. Right? And this is the dynamics that are going on beneath the surface. So if longs are staying committed on a downtick, there's no supply coming in. Right? Because if longs aren't selling on the downtick, liquidating, who's going to be selling those new lows? And again, absent of any news or outside influence, who's selling these lows here as the market's coming into demand? Retail traders would be selling here, right? They'd be getting stuck short. Weak longs would be getting squeezed out. But as far as smart money longs, if they're staying committed, the market's going to run out of demand here. So it's a very important clue when we pick up on the fact that the market is selling off with a lack of demand because of commitment, or the market is rallying with a lack of demand starting to come in as it's coming into a previous area of supply. Because in this case, we would see shorts staying committed on the uptick. And you have to stop and think about this. If shorts are staying committed on the uptick, who's going to be buying these new highs, right? That's what, all through January and February is the market, especially those days where the market would just make a new high by a couple ticks and then sell back off. Make a new high by a few ticks, sell back off. What's happening there is every new high that by a few ticks is made by any new shorts that came in, get squeezed out. Market makes that new high by squeezing those new shorts out because they're buying to cover. As soon as they're done buying, there's no more buying because shorts from higher levels might be committed, but there's no more demand interest up there, and the market sells off. So very important information. The other important clue on this chart here is something that we call our inventory transition levels that you see marked here and here. These inventory transition levels represent areas of stops, where stops are located. They represent areas in the market where we're looking for exhaustion to set in. Right? So again, there's that word, exhaustion. So we're looking to stack the odds, guys. We're looking for the market to come into a zone with a lack of supply. There's different ways that we can look for that lack of supply and confirmation of that lack of supply. The more information we have confirming, the higher the odds are for that particular trade. But we don't have any time to go further into trade entries, but there's different trade entries that we look for, particular setups, high probability, bread and butter type of setups, all based on order. Let me just show. All right, Case, you want to come on now? All right, Case, you take it away. I'll pass it over to you. Because we're going to be running out of time here, but.
Yeah, Thomas. Mic check 1 2 1 2. Okay. Yeah, I know we're really short for time here, and sorry about that. Just making sure my mic's working. Okay, it looks like it is. Look, I'll just start out by saying that, for us, we're not professional webinar presenters or salesmen or any of those stuff. And I know a lot of people were saying, get to the meat. And look, I get it. I understand. But the point I want to make is, it's important for us often to sort of precedent what we're having to, our methodology, our edge, and stuff like that. So, and I know we probably have a lot of people here that have spent time in our morning open room, and kind of understand more about our method and stuff like that. I actually recognize quite a few names. So, like Thomas said before we got started, we're going to offer something that we haven't before. I mean, if you go to our website, you'll see where you could get free access to our. We run twice a week for about an hour and a half. What we're going to do is offer a 7-day trial for $7, which gets you complete access to our OFE members trade room. This is a room that's open Monday through Friday, essentially from the open to close of the U.S. cash session. This is where you're looking over Thomas's shoulder. He's trading. He's breaking down opportunity, real-time live market trading in a training room. The dashboard that he just went through, again, pretty quickly. the dashboard is up all day long, basically on a webinar format like this. So we have a lot of members, we have a lot of people in our community, and this will be a chance for you to come in and get a sneak peek at that community, literally for nothing, for a couple of dollars. There's no obligation, there's no reoccurring billing, there's nothing like that. The point of this is come in, see how we trade, see our zones in action, spend some time with us. We know you'll be pleased. Again, it's tough to we have a pretty robust method. We have a pretty robust edge. It's tough to get it all in 40 or so minutes. So we have some other things that we're going to include in this trial for you as well. Morgan actually just posted the link to the 7-day trial, which is a very enormous link, but go ahead and click on it and that'll take you where you need to go. But along with the trial, each morning you're going to receive a market preview video from Thomas, basically updating and highlighting the zones of the ES that we're looking at going into the day. So this is basically your map, your market map. So that's something you'll receive as part of the trial that we're extending today. Let me see, is that link not working? Okay, let me, just 1 second, Morgan. I'll get that over. For some reason, it's not working. Good question, Rick, and I'll answer that here in just a second. I mean, the bottom line is, we put a lot of effort into our trade room on a daily basis. Thomas is on the mic. You're paying virtually nothing. It's $7. If the $7, just to be completely blunt and frank, the $7 doesn't make sense to pay to come see us for 7 days, then, it's not the right fit for you. No worries. But it's something that, we're real traders. We're in the market every single day. We're committed to our members and to, transforming our members into successful traders. A few bucks to make sure that you're committed is something that we're happy to extend. And like I said, we've always traditionally opened our open room, which is about an hour and a half, 2 hours, which, Nick here, Nick Niebuhr, I know you spent a lot of time in our morning session, but this will get you in all day, so you spend a week with us. It's one-time access. That's it. We've never done this before, so it's something that is pretty cool, and we're gonna give it a shot here. So again, lost my train of thought, but along with the trial access to our members' trade room every day, you're going to get access to that morning market preview video, and you're also going to get a video series from us. T, if you could just click over to the next slide for me, I'll talk really quickly about that video series. I know we're coming up on the time here. That's not a biggie. 7 is amazing. Nothing ventured, nothing gained. Also, it's their business. Yeah, I mean, that's Ross. You took the words out of my mouth. I mean, that's it. If it doesn't make sense to pay $7 to see us trade, then don't come in. I mean, that's fine. And look, it's not you pay $7 and then after that you get billed $100 or anything like that. Look, $7. Come in. We're confident that you're going to like what you see and how we break down the market. I mean, we have more success room that have been with us for a year and a half, 2 years plus that I could count. You could go to our testimonials page on our website. Does that mean everybody who's going to come here is going to have success? Absolutely not. Trading is hard. Trading is difficult. I don't click the mouse for anybody. Nobody manages my money or my trades. Nobody clicks the mouse for me. I'm responsible. Like we say, you got to put your big boy pants on when it comes to trading. But I'll tell you what, if you're interested in learning order flow and how the market is truly structured, you will absolutely like what you see here. So you're going to receive a video series as well. It's broken down basically through 7 or 8 videos. We're talking a lot about our zones, where the supply and demand imbalance is taking place, and how to take advantage of it. This video series is going to help you. They're all short videos, really to the point, and it's going to help you as you're in the trade room every day understand what the zones and what the studies represent. So you're going to receive that, really as a bonus to your trial here. How to gain a real understanding of the smart money. Everybody's talking about the smart money. It's like this elusive term now in the market, and it's been that way for a while. But we go into deep deep discussion with this on a daily basis in our room. And again, how to utilize these areas. You see these zones, you see the market react to them. Just because the market comes into a zone doesn't mean you automatically take a trade, although we have traders who do that. There's ways to stack the odds in your favor to confirm trade entry. I'm talking a mile a minute because the bell just rang, but the whole sort of idea behind our dashboard and our method is broken down in these videos. I mean, this isn't the full, robust education that we offer, but this is going to give you an idea of what to expect and what to see in our trade room and what our dashboard represents. So, T, if you want to just go to the next slide here, and then we'll wrap it up here, Morgan. Sorry, if you could just give me another minute or so. So just a quick breakdown. You're going to get 7 days access to our trade room. That's 7 trading days access. You're going to get the video series that I just talked about, and you're going to get those videos every morning while you're on your trial. And again, it's only $7 that'll get you in. We're only doing 40 spots, and that's a reason. And again, we take our community and our support and our interaction with our members very seriously, so we can't have 1,000 people in there paying $7. It'll just be too much to handle for us. So 40 spots available. The link's there. Morgan posted it. Any other questions? I know Thomas has been answering them as I've been talking. We'll get to them, and I know we're out of time. So you don't have to start it right away, Sally. You can shoot me a message as well. I mean, it's, again, it's not something we've done before. I don't know if we're going to do it again. I'm not going to sit here and say that this will never be around again, but, we just don't know. It's something that we're trying out. It's really a behind-the-scenes look that, we haven't given people before. I mean, you could spend, we've had a lot of open sessions where guests come in and see us trade live, but it's for an hour and a half or 2 hours. So, sometimes during those 2 hours, nothing's happening, especially, in previous months where volatility has just, come to a halt. But things have changed, these past few days. I mean, the market has opened up. Things have become very, very active. We're very excited about it. I know I am. And I know I probably got to shut up now. So, good stuff. Thanks, guys. No, it's 7 trading days, Jeff. So yeah, you're going to get full 7 trading days. And just for everybody who, and this is my last point, Morgan, I'll shut up. Anybody who's taken advantage of the trial, you'll receive an email from me either tonight or first thing in the morning, well before the open, with the link to get into that trade room. You also receive that video and stuff like that. So just keep an eye out. Casey@orderflowedge.com is where you'll see that email from. So even keep an eye out for your spam or your bulk folder. Make sure I don't end up in there as well. Good stuff. That's all I got. I'm sure I missed questions and stuff like that. Morgan, go right ahead.
Yeah, very cool. All right. Well, thanks again, Casey and Thomas. We appreciate you guys being on here. I'll type that link in one more time. And again, you guys can definitely check them out. Their website is www.orderflowedge.com. When we post the recording, we'll also get a copy of that trial link, but go ahead and take advantage of that. I do like the fact it's kind of a one-time thing. That way you don't have to forget about, if it's not for you, you don't have to forget about it auto-renewing. So, but again, thanks for that. We appreciate you guys being here. We did record the session. We'll get a copy of it put on our website. At this time, I'm going to turn things over to our next guest, which is Adrian Tagrahi, who is a professional traders coach. Adrian has been on the TradingPub several times and always does an outstanding job, and we appreciate her being here. So again, thanks to Casey, thanks to Thomas. We'll definitely have you guys back in the future. And Adrian, at this, things over to you if you want to go ahead and get your slides loaded.